Okay, so Nick, we get to a recession. Normally, I would buy bonds. What happens this time?
I think right now you continue to buy bonds, and right now people are looking for any sort of yield, any sort of positive yield. That's why you're seeing the U.S. rally far more aggressively than Europe. So right now, U.S. bonds have rallied anywhere around 10 basis points. German bonds have only rallied about 4 basis points. Now, they're still in negative territory. It doesn't move. It doesn't mean they can't move more negative. But I think if you're a bond investor and you do think we're headed towards a recession, you want to be owning any sort of positive yield that's out there. So identify countries like the U.S., Canada, Australia, New Zealand. All these countries are in the same boat. They're all being dragged down by global forces. So buy the positive yields, because I think you'll have far more bang for your buck than you would by owning a negative yield that's going to be moving a little bit more negative.
But Nick, when recessions have become more brutal over the last few years, when I get to that recession, like in the last recession, I bought bonds, and it was a great trade. Like, I'm not talking personally here, PA, but that's what most people did in the last recession. If we are negative 80 on the German 10-year when we get to the recession, is that still the place to hide out?
Look, people are worried about a return of capital, not a return on capital. So while I think optically it doesn't look like a fantastic investment at trading at negative 80 basis points, it doesn't mean it can't go to negative 120, particularly if the U.S. goes to 1% or even lower. So you better believe that if the U.S. interest rates fall, which we believe that they continue to will do, you know, our house view has always been that U.S. interest rates are going to move closer and closer to 1, then German rates will continue to move lower. So again, it becomes more of a trade-off. And again, personally, as a bond investor, our view is to own the positive yield and ride that down as opposed to owning something that's negative, even though it can continue to move negative.